What if your dividend stocks could pay you like a job does on a near weekly basis? Not once a quarter, not just monthly, but almost every single week. Now, it's not magic, it's just a smart strategy using reliable dividend stocks, and I'm going to show you exactly how to build it step by step. All right, let's kick things off here by tackling one of the myths out there in the world of dividend investing. And that's the idea that there are stocks out there, or even funds, just handing you cash every single week. Now, I know that sounds appealing. That would be amazing. But here's the reality. No single company or fund in the US stock market actually pays dividends on a true weekly schedule. There used to be a fund actually that did this, but it closed down. Now, that doesn't mean that you can't get paid every week, which is why I actually made this video. So instead of looking for one unicorn stock or fund that pays out 52 times per year, you build a portfolio of different dividend paying companies, each with their own different payout schedule. Now, by combining these, you can actually set yourself up to receive a dividend almost every week of the year. Now, most dividend stocks, they do pay out quarterly, and a handful of them will pay out monthly. But if you find the right mix, which I will teach you how to do here, you can stagger those payments so that something is always going to be hitting your bank account every week. So for example, Walmart, they pay in the first week of January, April, June, and September. While Blackstone Group, they pay in the second week of February, May, August, and November. When you blend those, right, when you blend them together, you start to see a pattern. And there's almost always a dividend coming your way from somewhere. And let's be real here, getting those regular deposits, it feels pretty awesome, especially if you're looking for, like steady income, or you just want to see your investments actually doing work for you instead of just a number on a screen. They can actually send you money, right? But with this strategy, you have to be very intentional about which stocks you pick and how you space out their payment schedules, right? Because if you don't do this right, it's not going to work properly. And I have to say before we get into this here, so if you're into investing strategies and info that really feels like little financial life hacks, make sure you subscribe because this channel is really built for investors who think like you. That said, before you start, filling your portfolio with random dividend stocks to try to do this, let's break down how this weekly income strategy actually works and why it's really just not as complicated as it sounds. So this approach is called laddering, right? In the finance world, laddering is a strategy where you buy different investments that mature or pay out at different times. So you're always getting some cash flow, right? That's the idea. It's actually super common with bonds, but it works just as well with dividend stocks. Now the big win here, well, you're not just, waiting around for one big payout every few months or waiting to sell a stock to make something. Instead, you're seeing those smooth, payments come in, smoothing out your income. So it feels more like a steady paycheck.
But here's the catch. If too many of your picks are in the same sector, one downturn could hit multiple legs of the ladder. Diversification is key.
Yes, Tiara, absolutely true. The strategy I'm sharing here, it does this, but something to be aware of if you are trying to do this yourself is definitely those factors. Now, let's make this even more relatable, right? So imagine that you're planning your bills for the month, okay? And you know that every Friday, money is coming in from your investments. Well, that's the power of a well-built dividend ladder. You're not just relying on one company either for this, right? You're really spreading out your bets, which can help you lower your risk and keep your income flowing, even if one company changes its payout schedule or worst case scenario, they cut their dividend, which we're going to try to avoid that as much as absolutely possible. And here's a pro tip. By reinvesting those dividends, instead of keeping them and keeping the income, you can actually grow your income substantially over time thanks to the power of compounding. But before you go out and you just start picking random stocks that have dividends, you need to know which ones actually fit the strategy, right? So in this next section here, I'm going to introduce you to the 12 dividend stocks that, when combined, can pay you every single week so that you can start building your own dividend ladder that provides you with a steady paycheck. Now, before you jump into any of these investments, realize that if you're going to count on these payments, you really want companies that not only pay consistently, but are also, strong businesses with real staying power. So for each pick that I have here, I'll give you a quick snapshot of what makes them a compelling investment right now, along with how many years in a row they've been paying their dividends. That way you're not just, chasing dividends that pay a lot, right? You're building a foundation that lasts. Oh, and also remember that this strategy is 100% focused on getting a solid dividend payment schedule. So if these companies perform well and the stock price rises in addition to your dividends, well, that's really just icing on the cake and all the better. So number one is Cisco Systems. So Cisco is a tech powerhouse that's been increasing its dividends for 13 straight years. And what makes Cisco a standout right now? Well, the company is riding the wave of AI-driven networking demand and continues to benefit from the global shift to cloud infrastructure. In their latest earnings, Cisco beat revenue expectations, and their strong balance sheet means that they're very well positioned to keep rewarding their shareholders, even during tech market ups and downs. Their dividend lands in the first week of January, April, July, and October as well. And next is Walmart. So Walmart has paid and raised its dividends for an incredible 52 years. And it's basically the definition of reliable, right? The company is seeing strong growth in its e-commerce and grocery segments, and it's expanding its delivery and membership services to really compete with Amazon. Now, even in a tough economy, people still need groceries and essentials, so Walmart's business, it really stays steady. Dividends hit in the first week of January, April, June, and September. Next, we have Blackstone Group. So Blackstone is a giant in the world of alternative investments, and while its dividend growth streak is just 1 year, and I know, the company's scale and influence, they're huge, right? So Blackstone is benefiting from continued demand for private equity and real estate investments, and it's been able to raise billions for new funds, even in a high interest rate environment. That's a sign of real investor confidence. Dividends here are paid in the second week of February, May, August, and November. Next, we have Johnson & Johnson. So J&J, it is the gold standard for consistency, with 63 years of consecutive dividend increases. The company's pharmaceutical and medical device divisions are driving growth, and J&J is launching new drugs in oncology and immunology that could be major revenue drivers as well. Now, even with legal headwinds, J&J's diversified business model and strong pipeline keep it a favorite for many long-term investors. Their dividends usually land in the second or third week of March, June, September, and December. Then there's Realty Income, right? This is known to many as the monthly dividend company. So Realty Income, they have grown their dividend for 21 years straight. They have just reported a 4% increase in adjusted funds from operations per share for 2024, and it's investing billions in new properties at attractive yields. The company's rent recapture rate is over 105%, showing strong tenant demand, and even as retail faces some headwinds from tariffs and higher rates, it's not going to impact them. Plus, they just announced a $2 billion share repurchase program, signaling confidence in future growth. Number 6 is Stag Industrial. So Stag has delivered 10 years of growing dividends, and it's one of the few REITs, which is a real estate investment trust, focused solely on industrial real estate. So think about warehouses and logistics centers. In Q1 of 2025, Stag's core funds from operations per share rose 3.4%, and the company signed major new leases with strong rent increases. Its occupancy rate is nearly 96%, which is crazy, and Wall Street analysts see upside potential as e-commerce and supply chain reshoring keep fueling demand for the industrial space. Next is Pfizer, and they have increased their dividend for 14 straight years. The company is making headlines lately with new breakthroughs in cancer treatment and other major drug launches. Pfizer just reaffirmed its 2025 guidance, with revenue expected to reach as high as $64 billion and a focus on cost savings and R&D productivity. Their pipeline is packed with potential, and recent clinical trial wins are keeping investment sentiment strong for Pfizer. Number 8 is Main Street Capital, and they pay monthly, and they have a 4-year streak of raising their dividend. So the company just posted another record quarter with net asset value per share hitting an all-time high and a return on equity of over 16%. Main's portfolio is focused on lending to lower middle market businesses, which helps diversify the risk as well. Its disciplined approach and strong capital position make it a favorite among income investors looking for steady growth. Next is Apple Hospitality REIT, not to be confused with Apple Computers and Steve Jobs, all that. Totally different company. But Apple pays monthly, and while they don't have a long dividend growth streak, it does own one of the largest portfolios of upscale hotels in the US. The company is showing resilience despite a pretty tough travel market right now, with revenue per available room growth in key cities like Houston and Los Angeles. They're also actively managing their portfolio and selling underperforming hotels and reinvesting into higher growth markets, which has helped them maintain a strong balance sheet and an attractive yield. Number 10 is Ellington Financial, and they pay monthly and they're known for a high yield, though they don't have a long, streak of consecutive increases. But what makes Ellington so interesting is they have a diversified portfolio of mortgage and consumer loans, which helps it navigating, changing interest rate environments as well. Now, the company recently reported strong distributed earnings and continues to expand its asset base with a focus on higher yielding opportunities. Then we have number 11, which is the Altria Group. So Altria is a dividend legend, frankly, with 56 years of consecutive increases. And the company just beat earnings expectations, which was driven by strong performance in its core tobacco business and growth in smoke-free products like their, nicotine pouches. Altria's focus on shareholder returns is clear, right? They paid $1.7 billion in dividends last quarter and completed a major share repurchase program. Even as cigarette volumes decline, Altria's brand strength and pivot to next-gen products keep their income in the spotlight. And number 12 is Coca-Cola. So Coca-Cola they're about as steady as it gets, right? They have a 63-year streak of raising their dividends and a brand that gets recognized just about everywhere you go, right? So what's keeping Coke strong right now? Well, even as the economy shifts, which it's definitely doing, Coke keeps posting solid sales growth, thanks to, many different product launches and smart marketing moves like expanding into energy drinks and healthier options as well. Their dividend usually lands in April, July, October, and December, which makes their stock a reliable player for anyone looking to fill in their payout calendar with a real blue chip stock. Now, if you're loving this whole idea of dividend income, right? Just wait till you see what dividend aristocrats are, right? These are the heavy hitters of dividend investing. And in this video right here, you can actually learn why dividend aristocrats keep making people rich. So click right here and I will see you over there.